Always great to do this with you both. Mohamed, what was that?
That was good news for the economy and further confirmation that the US has an exceptional labor market and an exceptional economy. You saw significant wage growth this late in the cycle, significant job growth, higher wage growth, and high labor force participation. And I don't think the fixed income market would have sold off this much had it not rallied excessively in the last few weeks. So bottom line, John, this is good news for the economy, and the market has to think very carefully about the amounts of cuts it is pricing in for next year.
Rick Rieder, where did this come from?
So I'd say a couple of things we talk about on the show all the time. You have a different economy than you've had in the past. We had 99,000 jobs in healthcare and education out of 199,000 jobs. So what you got to parse the data. And, you don't have this standard cyclical economy. You have a service-oriented economy where we're still hiring a lot of nurses and teachers, and it manifested itself again today. That is the one going forward that I think it's going to be worth focusing on. Part of why I don't really believe in this soft landing, hard landing. I just think in a service economy, you're just driving to a slower economy, but nothing that bad. One other point that I would say, and touching on what Mohamed said, you have a lot of people that are joining the workforce as well. Another 500,000 people come into the labor force. So I think there's something that's important here. You are building the dynamic around more people coming into the labor force. You saw the JOLTS report, some hiring coming down. So you're building slack, but really, really slowly. And again, it's an environment where the Fed can sit back, wait, and then I think the latter part of the year they can start cutting rates. But as Mohamed said, markets were a little overzealous. They were pricing in a March, more than a 65% chance of a March cut. That seems overdone, to say the least.